Hey everybody, what's up? What's going on? Just your grades. So, guys, on this video, I'm going to be showing you guys how I traded NFP, right? But before then, trust you're having a great weekend. So, let's just dive into what we came here for. So, yesterday being Friday, right? Friday, the 3rd of June 2020. I decided to trade as NFP because right, I do trade NFP every month, but I decided to use another strategy. I decided to trade SMC. Sorry, I decided to trade NFP using the smart money concept strategy. That's technical analysis, and it played out perfectly. So let's dive into what we're looking at. On the 4 hour time frame, we we had this downtrend and we got this nice change of character here, and then price immediately switched from bearish to bullish. So now what are we looking at? Well, what do we want to see? We've gotten our change of character, and then break of structure as follows, right? We've got our breaks of structures. We've got a break of structure. Price in an uptrend. Supply failing and demand holding. Demand holding. That's demand. Let's switch to the 1 hour time frame. Get a good look at price action. What price is actually doing. So we have our demand holding, demand, demand, right? And we can extend this. So when this price action happened over here, um, when this price action happened over here, price moved away impulsively, drastically. I expected price to come back down. Okay, I expected price to come back down to this area, to this area. I expected price to come back down to this area. But that didn't happen. This is what I was actually looking at. I was looking at price to come down and then push up. But it didn't happen. Rather, it continued moving upwards. It continued moving. You can see the price action continued moving. But when price got to this area, when price got to this area and this price action happened, I knew price wasn't gonna continue moving up because look at this. This is a liquidity sweep. It's not a valid break of structure. Had it been price, did this, huh? Had it been price broke this previous high impulsively, gave itself time to take out people before coming back in, I would have looked for a demand zone here or a demand zone here, something like that, or even here. You can see it's reacted at this point and it's reacting at this point. So had it been price did that, had it been price did those things, those are the things I would have looked for, right? But this is what price did. It swept this previous high, right? Price swept this previous high, didn't break out, just took out buyers and then came back down. Okay, took out sellers and came back and took out buyers. So what then happened? I then knew that this market wasn't gonna move up from here. No, I knew it was not gonna do that since it was a liquidity sweep, trapped buyers and trapped sellers. Okay, it first trapped sellers, people that sold at this resistance, trapped them, right? Pumped up. Then people that bought, people that had their buy limit here, got trapped also when price dropped back in. So what what I was looking at, I hopped to the lower time frame. I hopped down to the M15, and then I saw, all right, what's going on. We had our change of character here, right? We had our change of character here. This is a valid change of character. It's a valid change of character from bullish to bearish, a sweep of liquidity, take back in. So there was a supply zone over here, right? Which price respected. There was a supply zone over here, which price respected. So let's move down to the 1 minute chart to take a look at what actually happened there. So on the 1 minute time frame, you can see. Let's remove this and zoom out. Let's zoom, right. So use this candle, this whole candle. So price broke this structure here, dropped, gave a return. First of all, looking at this 1 minute structure, price broke this structure. This was a break of structure, a valid one, another valid break of structure, right? But you wouldn't have looked for a sell here. Why? Because it's not valid. There's no valid point of interest there. And another thing, we have our liquidity up here. So I knew price was gonna take out this liquidity. We have another point of interest here, which price respected. Yeah, created liquidity, took the liquidity out. So what did it do? We had our break of structure, right? Valid break of structure. Then we had our sweep of liquidity here. Liquidity sweep tapped into the supply zone. Then we had our change of character. So on the M1 here, you wouldn't actually get an entry for this. You would not actually get an entry for this. But if you take a look at this, you see that price was creating liquidity pool, internal range liquidity to be taken out, right? So we had a break of structure here, but so we were anticipating that price would take out this low here. Abi liquidity pool this low. Now let's look at this. How would you have entered this? I don't think there is a valid point of interest here. So let's hit the M5. Yeah, there's a nice POI. at the M5, right? So as price tapped into this POI, this supply POI, what happened? It broke structure. Price broke structure. So what happened? Can you take a look at this? NFP dropped on, okay, it dropped by 1:30, right? It dropped by 1:30 p.m. Now look at this. If you had sold here, right? If you had sold here, you would have had your take profits. Let's say 1 to 8 risk to reward. You still smashed it. See, take a look at this. Price tapped into this supply and dropped. Immediately it got to this structure, to this structural level. The news dropped. As it dropped, it spiked up, took out liquidity. Now let's go back to the 1 minute time frame. Let's take a look at what price did. You can see it took out structure, right? On the 3 minutes, it gave a nice entry on the 3 minutes because I mostly use 3 minutes for my entry. I mostly use 3 minutes for my entry. So it gave a nice entry here, right? So 1:30 p.m. You could have entered here. You had the chance to take your trade here, and market presented another opportunity for you to take your trade here again. So if you had sold at this point with your stop loss above the POI, you would have hit 1 to 6 reward. But if you had sold here with your stop loss above and 1 to 8 reward, you're getting the point now. So, sorry, excuse me. Taking a look at this, okay, I took my entry from this point, right? And then I took my second entry where, let's go down to the 1 minute time frame. Then, so on the 1 minute time frame, what are we looking at? What are we looking at? Take a look at break of structure. First of all, this was a sweep of liquidity, taking people out, catching people at the wrong side of the market, broke structure impulsively, right? Leaving imbalance. Look at this point of interest. Can you take a look at this point of interest? So as price returned to this PO, excuse me, as price returned to this POI, what did it do? The same thing it did here. It did it again here. What did it do? It left liquidity to be taken out. Can you see? We had a break of structure here, right? Break of structure here. We had a somewhat of a sweep of liquidity, change of character, right? Then what happened? Price mitigated this POI, mitigated this POI, and dropped massively. So my overall bias was that price was gonna drop, but the problem was getting entry. So you can see we had a break of structure here, and then price dropped. You see, it's not that hard or something. It's just following the order flow, looking for your point of interest. I took this trade here and got another entry here. And by the way, I'm still holding on to this trade till next week. So this is over. Okay, at this point, 1 to 13 risk to reward, and what else? What do we have here? We have 1 to 24 risk to reward. So guys, yeah, this is how I smashed NFP. You can do it. It's as simple as ABC. Anyways, I hope you learned something from this video. If you have any questions, um just ask the comment box below. So have a lovely weekend, guys.